Are you getting a little uneasy about the markets? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Wednesday, the 8th of August. Call it a gut feeling, an intuition, or whatever, but I'm getting a little uneasy with the equity markets, and here's the reason why. Our trade triangles are sending out mixed signals and have been for some time. The markets have been unable either to push into a plus 100 reading or have failed so far to move into a minus 100 reading. Only a long-term monthly trade triangle has consistently stayed in the negative column despite the recent short-term rally. Long-term indicators are important as they tend to be correct more often than not, and I'll give you some examples of that later today. The fact that we have had a signal should not be ignored. The markets have other major problems that are being swept under the rug right now. Europe is still a disaster. Cities in America are going bankrupt, and a huge amount of debt that still has not been addressed by either political party. With all that as a backdrop, tread carefully in these markets, as they are not out of the woods yet and may still have another reason for every trader to call timber. Okay, let's get started. We've got a lot to cover today, and we've got some good markets to look at. We've had some trade triangle signals that I think you'll enjoy looking at, and let's go right to our portfolio manager. And as you can see right here, we're plus 70. It was plus 60 earlier on, so it's just vacillating around that midpoint, 60, 70 on the S&P 500. And if we go to the chart, which we're doing right now, I'm going to look at a basically 3-month chart. You'll see we're just we talked yesterday about going out of the Donchian trade channel and coming back in. I think we're going to see this market come back down. I call it an intuition, I don't know, but we have a couple of things that I want to share with you on this market, and let's go right to those things. One is, you can see quite clearly we're making new highs. The other thing is, you can see right now we've got a negative divergence. So that is one thing to consider. I'm just going to call it a negative div. So I think possibly today or tomorrow we're going to see this market turn back down, and I think it's going to be very similar to these moves, and it could be later today. And I just think something is just not quite right with this market in my books. So let's see how that plays out, but let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be, I think it's the Dow, but pretty much the same picture there on the Dow. All the equity markets are pretty much the same. So here you see 3 tight days. Really, we had the big move up here. This is on Friday. This is where we close. I think the other thing to watch this week is where we close for the week. If we close lower than when we closed last Friday on the Dow at 13,096, I think that'll be a lot of people looking to rethink these markets. Again, we have the divergence here and the tight market up here. So I think something to be concerned about. On the NASDAQ, looking at that chart, we moved out of the Donchian trade channel and we've come back down. Now we have cleared this position, so it looks like it's made a base, but you see how choppy this market is, really thinly traded, and we're sort of all over the place. And again, you've got this concern that I have that's sort of just being unreported, and that's this potential negative divergence. You see that? And this, often or not, when you see that happening, it's something to be concerned about, and it tends to be an indicator that you're going to see a turn. So let's see how that plays out in the next few days. But for the moment, that's my feeling. I'm going to stick with those things. Our long-term trade triangle, you can see right here, is negative, and it has been for quite some time. And it's not in the black, but it's still there. And I've seen this happen before, when you get a signal and you think, oh, okay, it's not really a good signal, and the market sort of goes against you, and then it starts going down. So anyway, the trade triangles, the intermediate term trade triangles, have caught these markets quite well, but that's not really where we're at the moment. So let's clear the screen, go back to our portfolio, and see what's next up on the portfolio. Next up is going to be crude oil. And crude oil, again, we've got this area that's, I think, is going to present problems, where we did yesterday around this area here. We just peaked over the top, and today's action really isn't exciting. It's not negative, but it's not exciting. And you can see where we closed last Friday, which was at 91.26. Now, We're just higher than that, obviously, on the week, but let's see how we close today and see the action on Thursday and Friday. I think that's going to be very, very important. Now on the euro, we talked about the euro, the 124 level being like a really key level, which is right here. And this market has constantly moved or stayed. Every time it gets over 124, it seems to have a little problem and it comes back down. Now I think we're running out of time because I think things are still bad in Europe. You saw the downgrade to Greece to negative. Well, that's no surprise to anybody. You see the market's really kind of going down, negative divergence. And I think we could see this market quite easily trade down to an oversold condition. It hasn't got there yet, but this is a line to watch. If we break through that line, I think we'll see more downside pressure. Still not bullish on this market. Cannot get bullish on this market because we have our trade triangles still in a negative column, and that's the key thing. Now, if you are a trader using our trade triangles, you could potentially be in the just using the weekly, and that would say be in, but you'd be out because you use the daily for timing. Again, it's just all about timing and getting in and out of these markets, and they've been tricky. Don't let anybody fool you. Think this has been a cakewalk for anybody, whether it's a professional trader or a stay-at-home gamer. This has not been easy markets for a lot of people. So I'm going to show you some things to make it easy for you. Not eliminate risk, but certainly help control risk, which is important. So let's look at gold. Gold, again, is like the unsinkable Molly Brown. It goes down, it goes up, it comes down, it goes up. We may be building a base here. I don't know at this point in time if we are, but the reality is with our trade triangles, we still have that long-term negative trade triangle from 1532. Now I know the market's at 1632, but we've used tools to trade that market. We've talked about those tools before, how you use them and how you trade them. If you're a long-term trader, this is the difference between long-term and short-term and intermediate term. Intermediate term is the weekly trade triangle, and short-term is the daily trade triangle. Now they're telling you right now, based on this assumption, you should be long this market based on the first green trade triangle we had. Let's just put that in. And that came in right here. Now the market dropped down, so how would you trade that? Well, you use the daily, and that came in right here. So even though you had the signal at 1624, you would have been out at 1612. You would have taken a loss, yes, but you would have gotten back in at 1615. The market's 1614. So again, these are not easy markets, and I'm just saying this. It's hard for anyone to make money when the markets are like this. That's a bottom line. So let's go to our next market. And the next market we're going to be looking at is copper. Now copper tends to be a precursor of things, and you can see the 345, 355, very, very big points in this market. Again, it's sort of moving sideways. You can see we moved down. There was no follow through. We talked about this, and you go back to some of our previous blog postings, you'll see we said we thought the 330 level would offer support, and it did just that. Because why? Because that was a previous low period right here. So that was all it needed to find support. Now this is the opposite end of that track on the upside, and that's at the 355 area. Now that's going to be really heavy resistance for this market to go through, as is the short term, which is around about the 346 level, 345, 346. But that's going to be hard for this market to go through. And I think how we close this week is going to be very, very important. This is going to be a very important. This could be one of the most important weeks, I think, for the market this year. So let's just clear this off the screen and go to our next market. The next market we're going to be looking at, I think, is going to be silver, but we'll no, it's the Reuters-Jeffries CRB index. Now again, this index has the red triangle, a long-term red triangle from 305.38. It's 304.50, so it's just barely in the black. But this area, the 305 level, is very, very important. If it holds here, then we'll see this market potentially come down. Again, we're into an overbought condition, not unlike we were here. Remember, this looked like it was going to the moon, and it came right back down. So I think the key thing to remember here is the long-term trend is still negative. So going to our next market, which is in fact silver, you'll see this market is just chop, 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 chop. Like a little Vegematic machine. Really hasn't gone anywhere. The key levels there we're looking at is the 2850 level and later on the 30 level. But for now, it really hasn't moved at all. Now, what we want to look at today, a little bit different from our normal show, we want to look at two stocks that came up in our recent trade trials. Now, I did this earlier today, so we've actually had some more come in, but I'll show you. We had these two stocks came up. One was Lamar Advertising, right here. And you can see we had the trade trials. You can see the yellow hit the monthly, so we'll be talking about that. And we'll also be talking about Bristol Myers Squibb. Now, that also had a yellow monthly, and that's on the opposite side of the fence. Okay, so this is a yellow sell or exit, and this is a buy. Okay, so the other markets you want to look at, I don't like to look at markets less than these prices here. This is just absolutely, these are penny stocks. And if you're into penny stocks, that's great, but it's hard. These sometimes get in a pump and dump situation, so you don't want to pay a lot of attention to those. And sometimes the volumes are a little bit exaggerated, like 40 million shares. Well, yeah, look at the price. It's nothing. So anyway, let's just clear that screen and go to look at the markets we're talking about that I think we can make money on. So let's go back to our portfolio. Let's take a look at Lamar. This is Lamar Advertising. And if you look at this stock, you're going to see some very simple rules I'm going to share with you and some buys and sells. So let's just get started. So let's just go and bring up a chart. And here it is. Here's the buy point. 32.78. You wouldn't have been able to buy there because it just gapped open. But that's where sometimes when you use the weeklies, which came in right here at 29.20, that's what helps you time your trade. So trends are the monthlies, and the weeklies are timing. So let's scope this out for a little bit and get an idea of where this market's come from. So here we are. I'm just going to take some of these trials, just put the monthlies on. And I think that's where I want to be. Let me go back a little further. Yeah, this will be fine. Anyway, you can see we've had some trades here coming up. I'm just going to start, let me see, let's go a little further. A little too far. And, oh, okay. I think this is where we want to start, 417. Yeah, 417. So we had a buy. You can see I've just left the monthly trade triangles in. And this is a bad tick, by the way. We'll take that out. So 417, we had a buy signal at $16.76. Okay, this is just using the monthly, a simple way to approach the market, using the monthly. So $16.76. We then exit the position at $27.36. That gave us a profit of $10.70. I'll confirm this all afterwards. Then we had another buy here on the 10.6, and that was at 32.17, and that was an exit at 35.99. That gave a profit of $3.82. Now, you did not go short, and you saved yourself a lot of money because the market went down, but you managed to get back in on November 3rd at 25.88. 25.86, I beg your pardon. And then you got out of this position on the May 4th at 28.36, giving you a profit of $2.50. All told, you had 3 trades during this period. And those 3 trades, not counting today's trade, produced a profit, and I'll put this in. So you basically had 3 trades. Write this down, 3 trades. So number 1 trade is plus $10.70. Number 2 trade was plus $3.82 is per share. And number 3 trade was plus $2.50, giving you a grand total of $17.02. Okay, so $17 profit. You remember you started, the first buy you had was at $16.76. So it gave you, basically, had you started then, you would have basically doubled your money. And you would have had a return of somewhere in the region of 30%, 35% a year using this particular simple strategy. Now, You could say, well, I've just picked this one because it's a great example. That's just not the case, because I can go back in this market and show you other examples in this particular stock. But the reason I brought this up today was because this came up on our trade triangle alert. If you remember, we looked at this market. Let me just clear the screen. And we looked at this market, and there it is, Lamar Advertising. I only had a few of these that came up this morning because I did this report earlier, but Lamar Advertising was one of them, and the other one was Bristol Myers. So let's just take a look at Bristol Myers. So we'll go back to our portfolio, and we'll look at Bristol Myers, and we'll see also with Bristol Myers, there it is, big pharmaceutical company, minus 100, so we know the trend is down. And if we go and look at Bristol Myers, we can see, we'll go back from March 11th. And let's just see, here it is. That's not right. So we're starting here. This is March 22nd. Let me scope this in just a little bit closer so you get an idea. But this is a really big stock. I mean, really, really big stock. So here's the buy at 26.88 on the 22nd of March. Okay, so the market goes up. You exit at 27.18, and that produced a profit of 30 cents. Not knockout. It's not a knockout of the park, but this is not a knockout of the park stock. It pays dividends. So we get back in at 29.92, excuse me. We stay with that position. That was on the September 1st. We stay with that position until August 8th of 12, which is just today. And it's an exit 32.36. So that produced a profit of $2.44. So it gave you a profit of $2.74. Okay, the market didn't move that much. And you have to remember, you also get a dividend with the stock. So again, this is a very simple way to play, just using our monthlies. If you don't have time to look at the weeklies or the timing, we talked the long-term, intermediate-term combination of being long the trend on the monthlies and timing-wise on the weeklies. If you don't have time to do that, just do the monthlies. You have a game plan. You are set to make money with this program. So anyway, this is Adam Houston. Be sure to check those trade triangles. They're just these recent trade triangle alerts. They come up all the time. And we search for 2 million shares traded, monthly trade triangles. You can search for weekly trade triangles, and of course they come in, and there's a lot more of those today. So you can see how they come in, and you can just scope them out. When they're highlighted in yellow, that means that signal occurred today. So anyway, this is Adam Houston, Full Market Club. I'll see you tomorrow at the same time, the same place. Hey, thanks so much for stopping by. And be sure, if you're still looking for help, check out our personal one-on-one Market Club coaching. It's a free consultation and a free call. 877-219-1482. Hey, I'm Adam Houston. Have a great trading day. I'll be back tomorrow. Let's see how these markets close today. It could be an interesting day.